Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you January the 9th, 2020. It's Thursday. Let's talk trading. How to fix your trading, part 4. I mentioned, I believe it was yesterday, about taking things off of your chart that you don't know the reason or don't really have a reason that they're on your chart. If you don't know how they work. So today, I will assume you have a chart, and every indicator on the chart, it's there for a purpose. You know the purpose. You know how to use it. You know how it works. But the question is now, what pair to trade or what pairs to trade? I want you to stop and think for a moment. Ponder this. Do you believe that your chart, your setup, your system, your method will work equally well on every pair, or do you think it will work better on some pairs than others? I know I say ponder that, but the answer really should be obvious. Of course not. Some pairs are going to work much better, or rather, I should say, your trading system or method is going to work better on some pairs rather than on other pairs. So, how do you know which pairs it works best on? Trial and error is one way. Hey, you try it out on the pound dollar, it doesn't work too well. You try it out on dollar yen and it works like a champ. So you have to collect statistics, data, and then create the statistics and see. I mean, some people say, well, isn't that back testing? No, not really. Because you could back test it and you could say, yeah, these work better. But then when you get in that real world trading, you see it doesn't really fit with the back test. But if you run statistics and you know that there's a high chance that if you enter at a certain level, that it will move 2, 3, 5 pips in the direction that you are taking it, because you look at the statistics and you say, wow, 80% of the time it moved at least 5 pips. You've got something that could pay out in the future. But you have to remember, boys and girls, that on any particular trade, it could be a loser. And that's why it's important to put your risk management, your stop loss in place, and have your position sized according to your risk. So you do not lose more on any one particular trade than you're willing to lose. And of course, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. They could vastly differ from mine. And you also should know by now that trading is risky and you can lose all your money. So if you're seeking investment advice, financial advice, trading advice of any kind, you should seek that advice from an accredited financial professional. That way, if you lose your money, you got the advice from an accredited financial professional. They have some certificate saying that they're accredited, rather than somebody you're listening to on YouTube or off some trading forum on the internet or some Twitter or Facebook or whatever. Okay, so disclaimer is out of the way, and let's continue to look here. So we still have 3 pairs that have not filled that weekly gap, and look at the size of this weekly candle on our dollar yen. I mean, it actually broke out above the previous week's high for about 10 pips. So right now we've got an outside bar here. This week will be an outside bar. And right now, the dollar yen is in the upper wick zone of the previous week's candle. Whoops, why did that do that? Now look at this. We are 74 pips above the yearly open. But I want you to notice something, boys and girls. You see all these wicks right here? You see all these? You see this level right here? What is this level? It says 153. Let's just call this level. Let's just look at it here at the 150 area. You see how many wicks? And you can see right here how many times it's closed above 154. Only once, if you look back here. So use the information to decide which way you want to trade the dollar yen. Of course, anything could happen. And you can see here, we are way above the high of the first trading day of the month. Factor 61 pips above it. So you see how broke out of that zone, this trading range of the first trading day of the month. Actually, I'm sorry. Yeah, that's the first trading day of the month, which also happens to be the first trading day of the year, since this is January. And we're definitely cruising here to the upside. The monthly range, 193 pips so far. Now, we exited this inside bar the previous week, right? Or no, sorry, 3 weeks ago we had an inside bar. We crossed above into, that's the low, we crossed above it. Yesterday we crossed above that inside bar. Now we also crossed above the inside bar on the daily inside bar that happened 8 days ago. So right now we are in this range. We're also in the weekly range right here. So you can look to start exiting. Short trigger is 109.38. Long trigger is 109.58. And so far today, we've got 7 pairs with a range over 100. And it looks like the pound pairs are definitely making moves today. Crack through the previous day's high on the dollar yen. We're up 23 pips, 11 pips off of the current daily high, and 46 pips above the current daily low. We put in a new H1 highest open for the year right here, and we're pulling back. Oh, now, isn't this interesting? 109.53. What was that number I had called out a few charts ago where all those wicks were cutting? I think it was 109.53. Okay, let's look here. What do we have? We have a missed pivot. We didn't hit today's pivot. We've got red rats ready to get some cheese here. We are through the monthly pivot. We are now right around the monthly R1. Missed pivots. As you can see, we've taken out that missed pivot here. So we took out the November missed pivot. We took out the December missed pivot. So you can see these missed pivots here on this side. But now we have a new missed pivot right here. And just for the week, We took out that missed pivot. So, as I mentioned, today's how to fix your trading. Looking at these type of statistics showing, these are all the missed pivots. These are, the ones that still haven't been filled. So, for example, we had this missed pivot from I don't know how many weeks ago. This was back in October. It took it all the way to January to take out that missed pivot, but it took it out. But you can see here we've got some missed pivots dating back to 2002, 2012, 13, and none in 14, 15, 16, none in 17, 18, and we've got one left in 19. So, kind of should be obvious to the viewer that going for these pivots on dollar yen, whether weekly or daily, could be profitable. And here we are looking at just the simple horizontal lines every 10 pips and noting how price just doesn't like staying in between these two lines. So it closes in, it usually exits one way or the other. This was a very small exit, but it was an exit. If you put your stop loss here, it took you a couple hours, but you actually had a chance to make money. Wick zone, in and out, back in and out, and then out again. Horizontal line trades, just basically trade with candle color, candle direction as it crosses the line. Einstein line. I think I left this on from yesterday. As you can see, lots of buying. And once again, because of all of this, you can see we've got quite the range here, but these last few ticks haven't moved much. We are in the upper ATR range, average true range here on the weekly. So you can see here, once again, we hit the daily ATR 14, or they open plus half of the daily ATR 14, which was the minimum. And actually, we pretty much went through it, and it hasn't reversed off of it. But we are in the upper ATR of the week. So this is a place where you look, if you have a short signal, that's where you want to take it. And looking at the high-low lines that haven't been crisscrossed, once again, you can see here for the last, 600 and some bars, H1 bars that is, you can see there were a lot of highs that haven't been crisscrossed. So that's telling me maybe you can look for some reversals. Here, you can see these are all within the past 24 hours, these lows that haven't been reversed. So these are relatively fresh lines. So there's a chance, possibility that price could start crisscrossing back through. So, fellow traders, if you like to work on cars, sometimes you need a wrench, and there's different kind of wrenches. You could have an open end, a box end. You could have 6-point, 12-point, but it's not the tool, okay? Because it's not what you trade, it's how you trade.